thinking of making this summer vacation permanent? Financial planner Renee Rebelo joins us now with tips on how to get you back on track or on track for retirement. We're going to do it in black and white here because I'm like, wow, we match. Nice outfit.
It's working. Hey, you too. It's beautiful.
Thank you. So this is kind of a spring checkup.
Yeah, so basically it's just, it's time to look at your finances. If you're thinking about retiring for summer, because everybody wants to get rid of the winter blues, it's been a really dreary winter, and they're thinking, you know what, this summer I'm done, I'm throwing in the hat. There's some things that people need to look at, or if you're currently retired, some things that you should check up on.
Okay.
So one of the things is basically your cash flow. Right? Ensuring that you are the things that you need to do in your retirement, you have the funds and the resources to pay for that. So, looking at current needs of income against what you will be spending in retirement is huge. And, when we look at stuff like that, we like to take biological age into consideration.
Okay, so that's not the age that said, on your birth statement, your birth certificate.
So chronological age is the age that, your year of birth tells you are. However, biological age is the age in which you feel, the age in which your health dictates that you are. And this is a huge player in longevity of money and how much you're going to need, because if you're, on a list of medications that you don't think you're going to make it to 95, then, your income needs will be, you can decumulate your funds a little bit faster.
So maybe a good idea to take CPP earlier.
Correct. Things like that. Decisions of OAS instead of deferring it, or CPP. So these are things that, and that's a big question that I get all the time. When should I take my CPP? Should I defer it? It all depends on cash flow needs. How much you're going to need in retirement, how much have you saved? And looking at, getting these things set up prior to retirement. So maybe you want to downsize, or maybe you want to do a cottage, or, spend some time in Florida, which I love to do myself. How are you going to pay for that? And it might be the time to do things now, because when you're retired and you're on a fixed income, the financial institutions are less likely to say, hey, approved. So while you're working, get these things set up. Get a line of credit on your current property if you're going to stay there, and get it set up so that if an emergency comes up and you're on a fixed income, you have these things in place and you're not trying to fire sale something or, trigger gains or losses, right? This is a good year for losses. So if there's something you're looking at selling, and you have some gains from the past, this is a great year to trigger a loss on a rental, a cottage, whatever, and go back years to go after the gains that you paid and get a nice tax refund this year.
Right, and do it within the calendar year, right?
In the calendar year when it comes to losses and gains, correct. So your financial accountant or your tax person can help you with those specific details. However, as a financial planner, we work with them to look at what it does for your whole financial picture and where those assets get invested. So I have a lot of clients that are looking to sell their rentals now. And, they're like, where do I put that money? And now, how does that change my retirement cash flow? So we inject it into our software that allows us to do retirement planning, and it tells us based on this rate of return, based on your needs. It also says how much can you afford to go to per month. So if you're saying I want to spend $6,000 a month in retirement, I'll say, hey, you can go to $7,000 based on this rate of return and you'll be okay. You won't run out of money.
Right. And it's like, what am I going to spend that money on? Because you think, okay, I'm not going to pay for gas for commuting. I'm not going to be paying for lunches at work. I'm not going to be paying for a wardrobe at work or whatever. But then if you're volunteering, like you said,
you're working for free.
You're working for free and you're paying all that gas.
Correct. And the thing is, too, as much as you're not working, you're filling your time with other things.
Yes.
And some of those things might be shopping or dining out with friends or maybe traveling a lot. Travel in the first few years. The first 10 years are your maximum living years. Those are the years you need the most amount of cash flow. And by planning properly, you can make sure that those first 10 years are doing exactly what you want.
Okay. All right, great. We'll get you all your connections up on our website then at chch.com/morninglive. Great advice.
Thank you.